Well, thanks for joining us. I'm Marlon Bowling with a look at how we're going to open up our ag commodity trade today. And let's go ahead and look at that corn market and soybean trade and wheat to see how we are opening up. Lots of questions about how they would perform today, and they are higher. We have March corn 5 1/4 higher. We're now at 386 1/4 on the soybean trade right now. You currently have the nearby January 9 higher at 916 1/2. In the wheat market in Chicago, we have the March contract there trading 6 1/4 higher at 538 3/4. Kansas City March wheat is now trading higher as well. We're up 7 1/4, right at $4.50 even, exactly right there. And the Minneapolis March wheat is now 6 1/2 higher at 532 1/4. Dewey Strickler joins us now. He's with Ag Watch Market Advisors in Franklin, Kentucky, and it's been a couple of strong days in the ag commodity realm here, at least on the grade side here. Dewey, can we follow through for an extended time, or is this going to be about it, do you think, for a while?
Well, Marlon, this whole deal with China just kind of reminds me about those old spaghetti westerns years ago where you got a mail-order bride coming, but you don't know what she looks like. What you have here, we do have a deal apparently worked up, but we just don't know any of the details regarding the deal here. A couple of things that gets my attention is the amount here. We're talking about 40 to 50 million or $1 billion of ag products. And if China has agreed to that, that would surpass the record of $30 billion set in 2013. Okay, where does Brazil and other suppliers fit in the mix with all this? Are they going to be displaced or what? What if we get some political tensions that escalate here? Right now, U.S. has expelled 2 Chinese embassy officials on suspicion of espionage. So you got some questions here that just we don't have answers to here yet. So I think you got some optimism still going here. May not last much longer, though.
I wanted to ask you about this wheat market that is showing signs of strength right now, and it seems like that would be more on the back burner, if you will, when it comes to the China trade negotiations. Is that more related to developments in Argentina, because they would be a key competitor when it comes to wheat?
You've had some dry weather in Argentina. It's not enough to be a real concern. You've had more in Australia. You've got a little bit of dryness in the southern plains here as well, too. And secondly, you do have the funds are short some wheat. It's not a huge amount, but they are short, which is giving the market a little bit of strength. And wheat is really following the corn market right now, and the beans as well.
So how are the funds positioned then on the corn and soybeans?
Right now, the funds are short about 705 million bushels of corn, about 545 on the beans, and wheat about 75 million, which is just a token amount. Those corn and bean positions are not huge, but they're enough, to give the market a little bit of support here for a few days.
So that seems like a large amount. Is it possible that can be an orderly liquidation to get evened up or not?
Well, I think it really has been, and that's what we're going to see because, we're not looking at this market on the grains, just skyrocketing either.
Okay, Dewey, we'll pause right here, and we'll come back, and we're going to see how that cattle and hog market is going to be opening up this morning on a Monday, and we'll return right after these messages. Dewey Strickler is our guest, and we're talking about our open on this Monday's ag commodity markets, the last full trading week before we get into the Christmas break. And as we open up our livestock trade, we begin with our live cattle board. We go to Chicago and see just what is happening here today. Well, it's kind of quiet, mainly firmer. We have December 17 higher now at 122.55. February is on the negative side, but just a little bit, a couple of ticks. We're down 5 cents at 127.50. And then you have the April contract on the plus side, 15 higher at 128.35. So kind of timid to get things going on the live cattle. Meanwhile, on the feeder cattle market, well, we have the January up 20 at 145.88. You have March unchanged, though, at 146.25. And the April down 1 tick, about 2.5 or 3 cents lower at 148.03. So a mixed affair going on in the feeder cattle market. On the lean hogs, here we go with a look at the nearby February contract. We're down 33. We're at 69.17, and now you have April down a nickel at 76.17. The May on out through July, they're all a little higher, 10 to 30 cents higher out there. So, Dewey, let's talk about this livestock trade here. Of course, a lot of focus on the hog market when the China Phase 1 trade deal was announced on Friday. And some folks were kind of surprised that hogs couldn't at least go limit up on that news. They kind of backed away from their highs of the day, about $1 or so off of that. What does that mean?
Well, when I look at the hog market here, Marlon, when we put that low in here, I guess a couple of weeks ago at around 65.40, all the activity since then looks to be more like of a corrective type activity. That's telling me that, yeah, you're getting some positive news here, but technically the market is not responding. So that said, if we went down and set a new low, would not surprise me a bit before we put in a tradable low.
Now, when you look at the cattle, some analysts have been telling me that when you look at the global picture, China seems to be just subtracting all the pork it can get its hands on from around the globe, and that overall means they're really pulling down on that overall supply of protein. It doesn't matter if it's pork or beef or even poultry. I heard one report this morning that dark poultry meat is now a higher price than the white meat, and that is not normally the case. They said that is indicative of some of the demand going to China or some of the Asian countries there. So is that going to help support this cattle market and maybe even the poultry market?
I think it will for a bit here. Also, when I look at the cattle market here, when we got above that top of 127, it attracted a little bit of fund buying in the cattle there. The funds are long. They don't have a record position on, but they are getting closer to one there. So you got to keep in mind the funds. They're more technically oriented. They pay less attention to the fundamentals than other traders.
All right. Well, thank you very much, Dewey. Always good to visit with you. Dewey Strickler of AgWatch Market Advisors. He is based in Franklin, Kentucky. So that's how we're opening up, Janet. Very, very quiet on the livestock.
Quite a different trade than what we saw on Friday.
Yeah, but it's early.
Yeah. Thanks, Marlon.